Moshi.
This is my teammate.
Could you be the one? Good, good. Good, good. Could you be the one?
Assalamualaikum and hello. My name is Muhammad Iqbal bin Abdul Halim from JBA1145F. First of all, thank you for being here, and today I'm going to talk about our portfolio analysis. The purpose of this portfolio analysis is to choose the company that have the best investment with maximum benefit with lower risk. Our portfolio is consists by 5 companies that we have to choose, which is RHB Bank, Petronas Chemical, QL Resources, Franken, and Malaysia Airport Holding Berhad. All this company is listed on Bursa Malaysia. We will analyze the rate of return, average return, variance, standard deviation, and coefficient of variance for each company and KLCI. So from all these 5 companies that we have choose, only 3 companies that have lower CV than the other company, which is the first company is Franken, QL Resources, Petronas Chemical. We will compare the performance of the risk and return of the best stocks that we include in the portfolio with KSCI index to see whether our portfolio is underperform or outperform in the market. So we will moving on to security analysis for these 5 companies that we have choose. For the first company is Franken Corporation Berhad, which involved in technology sector. The second company is QL Resources Berhad. This firm run their business into consumer products and services sector. And the third company is Malaysia Airport Holding Berhad, that involved in transportation and logistics sector. And the fourth company is RHB Bank Berhad, that involved in financial and services sector. And last but not least is company Petronas Chemical Berhad, that involved in industrial products and services sector. So from all these 5 companies, we only choose 3 companies, which is first is Franken Company, second is QL Resources Berhad, and lastly is Petronas Chemical Berhad. So next we go to calculation of rate of return and average return. So formula is to calculate rate of return is ending price minus beginning price plus dividend and divide by beginning price and then times 200. For the average return, total return on securities divide by number of observation. And for the calculation of variance, standard deviation, and coefficient of variation. To calculate variance, the formula is summation of rate of return minus average return squared by divided by number of observation. And for standard deviation, you just square root the variance. And last, for the coefficient of variance, is variance divided by average return. So we go to our first company, which is Franken. The average return for Franken is 76.22%. And for variance is 1365.9130. For the standard deviation is 36.9683. And lastly, for the coefficient of variation is 0.4850.
The next company is QR Resources. QR Resources Berhad is an investment holding company. The company manufacture and sell fish meal, surimi, and surimi-based product, and also distribute animal feed raw material, animal health product, and layer farming. Moving on to the average return. The average return of the company is 10.92%. Then we're moving on to the variance, which is 46.7175. For the standard deviation and coefficient of variation, the value is 6.8350 and 0.6259. It is the second lowest CV among the 5 companies. The last company is Pet Chemical. Pet Chemical engage in the manufacture, market and sell a diverse range of chemical products including olefin, derivative, fertilizer, and methanol, which are used as a basic feedstock to intermediate product. The company headquarters was in Kuala Lumpur, and the company also listed in Bursa, Malaysia. The average return for the company is 11.26%, and the variance is 509.6810. For the standard deviation and conversion of variation, the value is 22.58 and 2.0046. Not to forget is Kuala Lumpur Composite Index, or known as KLCI. KLCI acts as the benchmark index for the stock market and economy in Malaysia, and it's comprised with 30 largest companies and provide both domestic and international investors. The average return for KLCI is negative 2.30, and the variance is 26.31566. For the standard deviation and coefficient of variation, the value is 5.13 and negative 2.23.
The security analysis have been done for 5 stocks, which is Franken, QR Resources, Malaysia Airport, RHB Bank, and Petronas Chemical. From the analysis, it shows that CV for stock Franken, QR Resources, and Petronas Chemical is low for 1 unit of risk compared to Malaysia Airport and RHB Bank. Based on security analysis, we decide to choose stock Franken, QR Resources, and Petronas Chemical to include in the portfolio. For this portfolio analysis, we use covariance rate, which is the statistical tools that widely used in an investment analysis field for evaluation of securities before including it in portfolio. It is used to measure the relationship between two assets that tend to move in tandem over time. The calculation can be derived by using the formula covariance Ij equal to Ri minus R by I, Rj minus R by J, and then divide by N. So for covariance for Franken and QR Resources is negative 213.1379, Franken and Pet Chemical is negative 51.7203, and QR Resources and Pet Chemical is 169.6009. Next, we use another statistical method, which is correlation, that is broadly used by an investor to measure the movement of stocks. The calculation can be derived by dividing covariance and standard deviation of securities. So for Franken and QR Resources is negative 0.80, Franken and Pet Chemical is 0.06, and lastly for QR Resources and Pet Chemical is 1.10. Now, we move to portfolio risk and return for selected stocks. Due to this company, Franken and QR Resources and Franken and Pet Chemical have negative correlation relationship, which indicate the stocks move in the opposite direction, and the stocks happen to have negatively strong relationship. So if you have 2 million fund, 40% of the fund we will invest in Franken Berhad stock, 35% will be invested in Pet Chemical Berhad stock, and 25% will be invested in QR Resources stock. For portfolio return, we use formula ERP equal to WI, ERI, and we got 37.16%. For portfolio risk, we use sigma square P equal to WI square and sigma I square plus 2WIWJ covariance IJ. So we got 16.7524%.
A comparative statement is a document used to compare a particular financial statement with prior period statement. Previous financials are present alongside the latest figure in side-by-side column, enabling investors to identify trends, track a company's progress, and compare it with industry rivals. As we can see from the table, the stock portfolio return is 37.16%, and the risk is 16.7524%. And for the KLCI, the return is negative 2.30%, and the risk is 5.13%. Outperform condition is when portfolio return is higher than KLCI, and underperform is when portfolio return is lower than KLCI. And from the table, it shows that our portfolio return and risk is outperformed in the market because it is higher than KLCI. In conclusion, we can see that Franken, QR Resources, and Pet Chemical are the ones with the best return from the 5 companies selected during the year observed. There are 3 analyses done for the selected company to compare each other's performance throughout the year observed. The 3 analyses done for the observation is security analysis, portfolio analysis, and comparative analysis. From all the observation, we can conclude that our portfolio return and risk is outperformed in the market due to its higher figure compared to KLCI.
Thank you for watching the video.